Let's just say you are fed up. You're ready to fire your bank. You should know what you're getting into. And the first thing is, what really is the difference between a bank and a credit union? On the Consumer Watch, Julie Watts explains plenty.
When it comes to banking, there are basically two choices, big and small. There's the big banks like Wells Fargo, Chase, B of A, and then the smaller guys, credit unions and community banks. Each has benefits and drawbacks. Banks are like any other business. They're trying to make a profit. But big banks lend and operate on a national or even international scale and engage in more complicated and risky transactions, like some that led to the mortgage meltdown. But credit unions and community banks operate locally, lending money to individuals and small businesses in the areas where they're located. Also, credit unions are not for profit. They're essentially owned by their members, who may pay a small fee to join. Another difference? Convenience. A big bank's ATMs are, well, everywhere, while credit unions and community banks have far fewer cash machines, so those who don't plan ahead risk paying ATM fees. And online transactions may take longer at smaller banks and credit unions because their computer systems may not be as sophisticated as the big guys. But smaller may be better when it comes to rates of return. They tend to offer better interest rates on savings accounts and CDs, as well as lower or no service fees at all, part of the inspiration for that bank transfer movement. But no matter where you go, make sure your money is guaranteed by the federal government. A new report out today finds 13 credit unions right here in California do not have federal insurance. On the Consumer Watch, Julie Watts, CBS 5.